Okay, we will call this regular council meeting to order. It's 3 p.m. and I'll ask Councillor Dunham to please read the land acknowledgement.
Thank you, Mayor Barkley. The town of Innisfail acknowledges that we are meeting on Treaty 7 territory, the ancestral and traditional territory of the Blackfoot Confederacy, Kainai, Piikani, Siksika, as well as the Tsuut'ina First Nation and Stoney Nakoda First Nation. We acknowledge that this territory is home to the Métis Nation of Alberta, Region 3 within the historical Northwest Métis homeland. We acknowledge that many First Nations, Métis, and Inuit have lived in and cared for these lands for generations. We are grateful for the traditional knowledge keepers and elders who are still with us today and those that have gone before us. We make this acknowledgement as an act of reconciliation and gratitude to those whose territory we reside on.
Okay, thank you, Councillor Dunham. We'll move on to 2.1. Are there any additions or deletions? No. Could I please have someone make a motion to adopt the agenda as presented, please? Councillor Maceros.
Thank you, Mayor Barkley. I will make that motion.
All right, thank you. All in favor? Carried, thank you. And we'll move into 3.1, the regular council minutes for April 14th. When somebody's ready, I'll please have a motion. Councillor Bates.
I'll move those minutes for approval.
Thank you. All in favor? Carried. And then the agenda and priorities meeting for April the 21st. Councillor Wing.
I'll make that motion, Mayor Barkley.
Okay, thank you. All in favor? Okay, carried. All right, so we'll move on to 4.1 and call on Director Vickers to introduce BDO today. Thank you.
Yes, thank you, Mayor Barkley. So we do have before Council the 2024 audited financial statements. The town has engaged the professional accounting firm BDO Canada to conduct the town's annual audit. BDO is a nationally recognized firm with expertise in municipal finance, public sector accounting, and compliance with public sector accounting standards, or PSAS. Their work supports the town's commitment to transparency, accountability, and sound financial management. The 2024 audited financial statements have been completed, and as required under provincial legislation, the audited financial statements, as well as the financial information returns, will be submitted to Municipal Affairs by the May 1st deadline. The audit was conducted through a combination of on-site and remote work. BDO staff performed their on-site audit procedures between March 18th and 19th, with follow-up tasks and final documentation completed remotely. The audit provides independent assurance that the town's financial statements represent its financial position and operations in accordance with Canadian PSABs. BDO will now present the 2024 financial statements to Council and will be available to answer any questions you may have. And their insights offer Council an important opportunity to review the town's financial health and understand any key findings or recommendations arising from the audit process.
All right, thank you, Director Vickers. So welcome. Good to see you again.
No clicker. Do they have a clicker?
Thanks, everybody. That's quite the introduction. So my name's Mitchell Kennedy. I'm the senior manager on the engagement, and I got here with me Dylan Thudium. He was the manager on the engagement. He's going to run you guys through what we call the final letter of those charged with governance, and then once he's done that, I'll take over the financial statement presentation. So at any point, if you guys have questions, just stop us, shout out whatever you have, and we'll try our best to answer whatever questions you might have.
Yeah, thanks for having us. We've presented this in the past couple of years a little differently. This is going to be a combined communication letter. What that means is that it's going to cover our planning procedures as well as our final communications. So it might look a little bit different, but we're going to try and go through as much as we can. If you have any questions during, let me know, or you can wait till the end. Okay, so this communication really just highlights key issues, the risks we identified, a little bit about our planning process and how we assess our risks, significant internal control deficiencies if found, and just noting that during the course of our audit, management made certain representations to us in discussions and in writing, and we've documented these representations in our working papers. Okay, I'll flip right through. There's our team. Mitch introduced me and himself, and then Lorraine isn't here today, but she is the partner on the engagement. Okay, this slide just covers our responsibilities. This is the scope of our work as agreed in the engagement letter. We're presenting our significant findings to members of council. We're providing management with constructive letters and timely letters. We're consulting regarding accounting and reporting matters. working with management to issue the statements, identifying, assessing risk of fraud, and obtaining an appropriate audit evidence regarding the assessed risks. Okay, we also have responsibilities around fraud risk specifically. We're responsible for planning and performing the audit to obtain reasonable assurance that the financial statements are free of material misstatements, whether caused by error or fraud. So we identify and assess the risks, we obtain sufficient and appropriate audit evidence, and we respond appropriately to fraud or suspected fraud. On the next slide, we go over fraud a little bit more. This just covers our inquiries with management. We get an understanding of their process for identifying and responding to risks. We inquire whether there is any suspected alleged fraud. You'll note on that last sentence, we are not aware of any fraud affecting the town. If you're aware of any instances of actual suspected or alleged, please advise us. Okay, materiality. This also looks a little bit different this year as we've set materiality at 2 levels. So you'll see that we determined materiality to be 1.9 million for the year ended December 31st, 2024, which is calculated based off 2% of tangible capital assets and was used to test deferred capital contributions, in this case, offsite levies. We also had a specific materiality. This was determined to be $1 million, calculated off 4.5% of total expenses, and this was used to test the remaining financial statement areas. So we're looking at this as the town has a few distinct areas. Building and maintaining infrastructure and TCA is separated from other services. And just based on the fact that the size and the scope of those areas are vastly different, we look at different levels of materiality. Materiality is the amount determined in the audit that would impact a user's decision-making. So specific to TCA, I believe there's 95 million, $100,000 error in 95 million is looked at a bit differently than $100,000 error in revenue, for example. So because those impact decision-making a little bit differently, we've set 2 different levels of materiality. I don't know, Mitch, if you want to talk about offset levies now, because that's what we based it on, or if you want to save your spiel.
So there were 2 new standards that were required to be adopted under PSAS this year. One was Section 3400, the other was Section 3160. So 3400 is revenue recognition for goods and services related to exchange transactions, and 3160 is public-private partnerships. Public-private partnerships has to do with whether or not a municipality engages with a private entity to effectively build infrastructure assets. So the reason why offsite levies was an issue in the municipal world this year is because we've been on the phone, we've had emails, we've had lots of discussions with other municipalities and other accounting firms in the year. And so we were discussing the idea of Section 3100, which is related to restricted revenue, or more specifically, externally restricted revenue. And under the MGA, Section 648, there's a specific restriction that says offsite levies must be used for the intended purposes in which they are collected for. So before I go into this, I just want to say that it's not a risk for this municipality, but it was something we had to consider through discussions with other municipalities and other accounting firms. But the idea is if you're collecting offsite levies, it's supposed to be sitting in deferred revenue and spent with the corresponding project or basin or whatever you have collected it for. So in short, that's kind of why we were using the 1.9, because what we were basically doing is we were diving into your reserve balances to make sure that you haven't historically recognized old offsite levies and put them into your reserve balances. So
further to what I mentioned, misstatements are considered to be material if they could reasonably be expected to influence decisions of users based on the financial statements. We also talk about clearly trivial here. This is a threshold that's set typically at 5% of materiality. So for our specific materiality of $1 million, we're looking at $50,000 for a clearly trivial value. Any errors found over $50,000, your clearly trivial threshold, is communicated in the corrected or uncorrected misstatements during the course of the audit. Status of the audit, substantially completed, pending a few items, including approval of statements, subsequent events review, signed letters. The last sentence there, just noting that we've conducted our audit in accordance with Canadian generally accepted auditing standards, The objective of our audit was to obtain reasonable, not absolute assurance about whether the financial statements are free from material misstatement. Okay, this slide, a little hard to see. I think you all have it pretty close in front of you, so it should be okay. This just goes over some of our audit findings, which includes some of what Mitch just went through with new accounting policies and some of the significant risks that were identified during planning and addressed throughout the audit. The first two, you'll see there, revenue recognition and management override of controls. These are inherent risks. You're going to see these in most audits. For revenue recognition, there's a presumed fraud risk relating to revenue recognition and ensuring revenues are recorded in the correct period and in accordance with any agreements related. Audit findings during the year, the town reported revenue of 28.1 million, of which 9.4 million was taxation revenue, 17.6 million was user fee revenue, and 1.1 million was grant revenue. The town represented that services have been performed and that reasonable assurance exists regarding measurement and collectability. We substantively test revenues. We agree revenue recognition to any agreements in place, and we noted no issues in regards to revenue recognition. Management override of controls. Management is in a unique position to override the controls or circumvent the controls in place. We review journal entries throughout the year. Management makes certain representations to us about whether they're aware of any fraud, actual, suspected, or alleged. The next one we'll see here is asset retirement obligation. This would have been very similar to last year. This was a new standard that came into place in 2023, I believe, and there's a risk related to the identification, recognition, and measurement. Management has represented that there's a gap departure in regards to the identification, recognition, and measurement, which Mitch will go over when he gets into the report. This is the same gap departure that was there last year, as the work has not been fully completed yet in the year. As such, a qualified report is issued on the financial statements. Okay, new accounting policies adopted during the year. Mitch just covered both of these. New revenue standard differentiating between exchange and non-exchange transactions, and also PS 3160, which is public-private partnerships. This standard deals with how public sector entities should account for P3s that are built and operated in partnership with private companies. At the reporting date, the town does not have any public-private partnership agreements, and therefore this standard does not impact the statements. Internal control matters, I won't go too into depth here. You'll see on the right-hand side, that last sentence there, that no control deficiencies were noted, that in our opinion are of significant importance to discuss. But it just goes over the procedures we do throughout the audit, such as documenting the processes, the systems in place, and testing. Okay, the rest of this is kind of our process. This is a pretty good slide if you want to understand the audit process a little bit better. I like this, that how it's presented, that it's not a straight line. There is a starting point, which is going to be our scoping and identifying risks, but we're moving back through each stage as new things arise. We might, re-identify risks or change our scoping based on new information that comes to light. Okay, the rest of this is really resources. I'm not going to go through, I don't think, any of this.
It's video
marketing.
/ propaganda.
You don't need to see this. And I think Mitch will jump into the statements unless there's anything else you want to talk about here. No.
No, that's it. All right, let's see if I can figure this thing out. Okay, you're the driver? Okay. We'll start with the audit report, which is the next 2 pages ahead. So this is a very familiar audit report. It's the same one that we issued last year. So we have audited the financial statements here in front of you. The audited financial statements are clean, or rather free from material misstatement, except for the one qualification that we note in the paragraph below, which notes the basis for the qualification. So the short version is there's a qualification on these financial statements which say there's theoretically a gap departure on the adoption of asset retirement obligation, just simply because we can't adopt it because we don't know what the liability is yet. Besides that adoption, everything else is clean on the financial statements. So even though we prepare and assist management with the preparation and construction of these financial statements are owned under management and the council here. So these financial statements are yours. So it is your responsibility to handle these financial statements we're presenting in front of you. Our objective as auditors are to obtain reasonable assurance that these financial statements here in front of you are free from material misstatements. Then we'll go to the statement of financial position, which is 2 pages ahead. One back. There you go. So this is going to be a snapshot as at December 31st. What I'll do here is I'll just do a quick high-level comparative from current year to prior year and highlight any significant differences. So as far as your financial assets are concerned, the balances are relatively similar to where they were last year. There is a difference of about $600,000 related to your cash. We'll go over those more in a little bit once we get to the statement of cash flow. There is about $1.3 million in grants that are in accounts receivable as well. Going further down in your accounts payable section, everything's pretty similar to what it was last year. There is a reduction in your long-term debt, which is just principal payments made on the debt that you guys have. Your net financial position has improved from the 11.8 last year to the 12.7 this year. And then there's your net or your non-financial assets, which is just mainly made up of your TCA. So for your TCA in the year, you guys bought about $5.3 million in capital asset additions. Of that $5.3 million that you bought in the year, you had about $4 million in amortization. So your ending accumulated surplus leaves you at $115 million at the end of the year. Go to statement of operations. So this is your statement of operations for the year. It's your income statement. So when I look at this, I typically compare what you guys had budgeted as a council for 2024 versus what actually happened in the year. And if there's any differences between budget to actual, I'll kind of compare it to what it was last year. And my goal here is to highlight any significant variances that appear on this. So there is a little bit of weirdness going on from your budgeting because you can see that you guys had budgeted about $24.8 million in revenue. Your actual revenue is about $27 million in the year. The reason why you have that significant jump in the year is because you have land that was sold in the year for approximate proceeds of about $3.4 million, which is causing a significant difference from your budgeted amount. Going down to your expenditures, this one's a little bit more confusing. So we have to, I guess I'll show what's going on. So your administration, you guys had budgeted about $6.2 million. Your actual is about 2.7. What's causing that difference is amortization was fully allocated to the administration. We have to go back and correctly allocate it out to the corresponding functions. So realistically, there's $4 million in amortization. So if you back that out of your administration, it'll effectively normalize. I'll just talk about the aggregate total. So because you guys had about $3.4 million in proceeds related to the disposal of land, you guys had a cost of the land, which is relatively close to the same, which is causing your total expenses from the 2.5 budgeted to your 28.6 to be increased relative to the cost of the land that was sold in the year. So in reality, if you just look at your excess of revenue over expenditures that you guys had budgeted, your only real true difference is going to be related to your transfer of capital. So you guys had budgeted excess of revenue over expenditures of about 1.4, but you have an overall deficiency of about $500,000 in the year. So we have to go back and correct the function and allocate the amortization still, but other than that, the numbers are accurately reflected on here. Do you guys have any questions on that? I know it's a little weird.
Well, just a couple of other things, and I don't realize or understand quite what's bundled into everything. So transportation services is a large difference from the budgeted amount.
So I'll do you one better. So just keep in mind that 28.6 million that you have right there. Can you do me a favor and jump really quickly to note 20, I believe it is? Sorry for the jumping around. Oh, yeah. There we go. So if you see your actuals, that 28.65, that's the same number of your expenses that was appeared on your income statement. Your expense by object is literally, instead of presenting it by function, it's broken out by your actual expenses in the year. So that's where the 28.65 is actually coming from. Does that add clarity?
Can you go back to the other page when you did the statement of operations? So what I was asking Mitchell was, like, transportation services is at 4.5 million, but budgeted at 2.6.
Yeah, that's part of the amortization allocation that I was referring to. So the admin has all of the amortization in that column.
Okay.
It needs to be split out to transportation, to recs and parks. So like Parks and Recreation is out like $900,000 on the budgeted side.
Okay.
It's just due to how the amortization got allocated among
Okay,
those
same with
groups.
planning development, same thing. Like,
Yeah. So
it's
if you
all
look at the
amortization. Okay.
total amount for 25.1, if you back out the amortization, it's relatively close to what you guys had budgeted in the year.
I have a question, sorry.
Yeah, of course.
Directly. So why would the amortization be lumped into those categories? Because that's typically not how our statements would read, would they?
Yeah, so amortization is not like a capital, but so the way this gets presented theoretically is above the line is supposed to be like operating activities, and then we say below the line. So when I say below the line, I mean everything under your expenditures is supposed to be capital in nature. And so anything capital in nature theoretically gets separately broken out. So you have like your government transfers for capital, that's your capital grant revenue. So the funny thing about amortization, even though it's driven by your TCA, it's theoretically considered an operating expense. And so when it's considered an operating expense, it's got to be grouped up by function within your expenses up there, if that makes sense. Yeah. Okay, I'll have you go to the statement of cash flow, which is the next page, please. So your starting point with a statement of cash flow is going to be the number that was at the bottom of your income statement or your statement of operations, that $507,000 deficit. And then within that $507,000, we add back items that are in there that are not cash related. So we add back your amortization because the amortization makes up that $500,000. And then there's a net loss on disposal of TCA for $17,000. And then in your change in non-cash operating balances, this is quite literally just the changes in your statement of financial position. So this is comparing current year to prior year numbers. So the big one here is your inventory for consumption. That's just going to be your land held for resale in the year that you ended up selling. So that was the big change for the $2.8 million in the year. Then going further down, there's your capital transactions. You guys had bought the 5.3 in capital assets in the year. You had proceeds on disposals of about $100,000 related to your TCA. And then there is that restricted cash balance of 233.6, which is just cash that you guys have that's currently restricted. And so your net movement in your cash is about $311,000 at the end of the year, which puts you at a total balance of 18 million. And of that 18 million, we have to back out 350,000 of that because it's restricted, which gets you at that 18 million flat. Okay. Then I'm gonna have you jump to, I think it's page 13. So I'm not gonna talk about these again unless you want me to, but like these are the new standards in the year. So for the past couple of years, PSAS has had, well, last year was the adoption of 3280 and the removal of section 3270. This year, these are the two new standards, and theoretically, there was the addition of municipalities being able to use intangible capital assets this year. Municipalities get a break until 2027. So when 2027 comes out, there's the adoption of conceptual framework. So basically what that's going to do is it's going to change the face of what your financial statements look like, but it's also going to consider changes to revenue recognition policies. It's going to look at things related to leases. So it's effectively going to make everything that you have that could be a lease effectively be a capital lease unless it's less than a year, like short term. So they're looking at adopting some IFRS 16 type work for municipalities, but you get a break for 3 years, but come 2027, there's going to be a lot of changes that happens in the municipal world through the adoption of conceptual framework. So just to be aware. And then I'll have you jump to note 7, please. So this is the current debt that the town of Innisfail currently has. So it's just debentures with Alberta. So you have about $5 million in debentures. This is the expected cash outlay that's going to be happening over the next 5 years. So after 2029, it's not saying that you owe $290,000. You probably have another 2 years after, so it'll mature significantly later after, but you're effectively making about $700,000 in payments every single year. And then once we're in 2025, you'll just see 2030 and then thereafter for the next annual amounts. And then note 13, please. So this is the equity, or effectively the net book value of the municipality. So your municipality equity is broken up into 3 major categories. There's, first of all, your equity in TCA. That's just taking your net book value of your capital assets and subtracting off of your long-term debt. And that gets you your $90 million. And then there's your restricted surplus of about $17 million. So that $17 million is money that council has effectively set aside for future projects. And then there's your unrestricted surplus. So your unrestricted surplus is effectively like a rainy day fund where you could use it for operational purposes. You could move it into your reserves. It's just a bucket of money that you guys currently have that you could use for whatever you need to use it for. So that's what your equity position looks like. Your net financial asset position is about 12 point something million, but if you take off the long-term debt and your deferred revenue, it effectively means your reserves are currently fully funded. So that's a good thing to hear for the municipality. Go to note 14, please.
So, Mitchell, can I ask you a question, please? I'd just like your opinion. So on our debt, it's at 4.98%. Interest rates have ticked down quite a bit since then. Like, do you ever see or recommend that you take a look at maybe refinance and pay it out, or is that just kind of leaping it?
That's an interesting question. Out of 13 years of doing this, is the first time I've been asked that question. Like, as you all know, the world's kind of in a weird state right now.
Is it? Just kidding.
Economically anyways, we're not really sure what's going to happen with interest rates here. I know they did talk about dropping prime. I mean, you should always shop around to see what you can get for your best interest rate to potentially.
I guess I just see prime at 275 right now, I think is what it is. I'm not sure what a debenture is at this point, but if it's, a point and a half less, that's pretty significant on $5 million.
On $5 million, yeah. Yeah, so you should always consider your options that are available. I know it's just common nature for a lot of municipalities to use, Alberta debenture loans. I personally don't know the answer as to lending rates and what's currently out there and available, but that's an interesting idea. I'm not sure. I can't help you on that one, but it's a good question. It's a very
your opinion on it. That's all.
Yeah. If you could always reduce your cost in any way, you should always consider options. So to talk more on that, it's your debt limits. So your MGA effectively restricts how much debt a municipality is allowed to have. And so how that gets calculated is effectively taking 1.5 times your total operating revenue. So going back to the above the line revenue. So if you multiply the top line revenue by the 1.5, you're going to get your $40.5 million. And so what that number means is it's the maximum amount of debt that the municipality is allowed to get If you were to ever wanting, or if you ever want to exceed that number for whatever reason, it requires approval through the government in order to do so. You guys have $35.5 million worth of room that you could potentially get out in debt if you ever so need to. And then there's your debt servicing limit. So that is also restricted under the MGA, where it's a different calculation. They take 0.25 times your total operating revenue, and that's the number, that's the total amount of debt that you can service in the year. So that's going to include your principal and interest payments on the debt that you currently have, which allows you to have an extra $6 million in debt-related payments in the year. So you guys have lots of room. It's available there if you need it for whatever reason. And just because I'll go to note 20 just to show you guys the expense by object again to illustrate to you guys. These were your expenses. I like this note rather than the expense by function, although both notes are good. These are just easier to highlight kind of where all the municipal expenses are actually coming from. So at the end of the day, town of Innisfail is doing well. So that's my spiel. I don't know if you guys have any other questions.
Okay, thank you for the spiel. Does anybody have any questions, Councillor Wing?
Yeah, just a quick question for Mitchell. It's always interesting when you hear qualified opinion and weirdness in the same presentation, so I just wanted to check something. From the perspective of the amortization piece, and I understand exactly what that is, but from a budget process, is there something we should be doing differently, or are we okay coming to year end and seeing such a dramatic difference because of that?
I'm trying to find the right words to use for this. So to be frank, a lot of municipalities don't budget for amortization because it's a non-cash item. So usually municipalities will adopt it from a cash perspective. The MGA requires that you theoretically you budget using amortization. So the amortization allocation that happened, that was a coding error on our end. That wasn't an error with you guys. I noticed this on the way here, and then we have to make the change to make the presentation look properly. So that's why I brought it up, because we're hoping that you guys approve these financial statements pending that amendment on the financial statement so we can clear it up for the users.
For the future, okay.
Yeah.
And then just regarding the qualification, we're working in the right direction to have that qualification removed in the next couple of years relative to asset retirement. That's something that's ongoing work, I think.
Can I defer that?
Absolutely. Thanks, Erica.
Mayor Barclay, through to Councillor Wing. Yes, we are working, we've done extensive work with the contractor to do some work on all of our facilities, and we are going to be working with BDO through the summer with a different group with the BDO to help us work through that. We're hoping to have all this done for the next audit by this time next year. Hoping. Keep the fingers crossed.
Mayor Barclay, I can add to, in reviewing the management letter, there is a reference to the offsite levies, which will go back to management for review, deeper dive in, and move to resolve those recommendations by the audit team.
Sounds good. Anybody else have any questions? No? Okay, if not, I would ask that somebody please make the first recommended motion that we approve the 2024 audited financial statements. Councillor Dunham?
Mayor Barclay, I'll make that motion.
Thank you. Questions? All good? Okay, all in favor? Okay, carried. And then we'll have somebody please make the second motion. Councillor Highstep.
The council approved the 2024 Alberta Financial Information Return.
Thank you. Any further questions? All in favor? Okay, carried, unanimous. Thanks. Thank you very much for coming.
Thanks. Thank you. Thank you, Erica. Thank you, Todd. You guys are great. Appreciate your help. Thanks so much, everybody.
Okay, thanks, and thank you, Director Vickers, and your staff for another job well done. So. Okay, we'll move into 4.2 and the CAO report.
Just simply, Mayor and Council, the report's there for your information. If there's any questions regarding the report or anything else, please ask, and I'll be happy to answer your questions.
Okay, we have to make you read it one of these times. Could I please have someone make a motion to approve the report as presented? Councillor Bates.
Also move that we approve the Chief Administrative Officer report dated April 28th, 2025.
Does anybody have any questions for our CEO? Nothing? All right, all in favor? Okay, carried. And then we'll move into council action control. And somebody's ready. I'll just have somebody make a motion, please, to approve council action control as presented. Councillor Wing.
Thank you, Mayor Barclay. I'll make that motion.
Perfect. Any questions? All in favor? Okay, carried. All right, now we'll get into corporate services, 5.1 with Director Vickers and the procedure bylaw.
Okay, so we do have the updated council procedure bylaw before council for review and approval. So at last agenda, we did bring forward the draft bylaw 1737 and provided some feedback. So we have attached, the attached bylaw has been prepared, and it has included the following key changes from the current version. So council reports, 25 includes that selection for written council reports to be submitted by members ahead of meetings. Electronic preparation and meetings, this new version does add the procedures for electronic council meetings, including the criteria for individuals attending remotely or fully electronic meetings, reconnection rules and platform standards. This reflects section 199 of the MGA. For public hearings and electronic participations, the new version allows for virtual participation and submission deadlines. It reflects Municipal Affairs Statutes Amendment Act of 2024. This is an upgrade from 2020 where only permitted in person. The open mic has now been removed from the agenda and bylaw. The delegation criteria has been clarified, adds now approval criteria for delegation requests under relevancy, urgency, redundancy. The mayor's ex officio role has been added. So they are a voting member of all council established committees with their presence counting towards quorum. This does provide more flexibility. Committee terms of reference, so standalone bylaws are now required. So the council procedure bylaw only includes the agenda and priorities committee in Schedule A. Bylaw modernization, so we just gave it plain language, general streamlining, reorganization, just to make it nice and cleaned up. The motion procedures has been explained. So the new version includes a detailed motions table outlining types, so subsidiary, privileged, incidental, as well as the vote thresholds and rules, as well as the inaugural meeting procedures. So it does add specific procedures for the inaugural meeting that would hold the oath of office, board committee appointments, discussions. So we'll take any questions that council may have.
Okay, thank you, Director Vickers. Could I please have someone make the recommended motion? Councillor Maceras?
Thank you, Mayor Barclay. I move that council give first, second, and
No, just
first reading to council procedure bylaw 1737-2025.
All right, thank you. Does anybody have any questions about this? I know we saw it last week, but no, all good? Okay, all in favor? Okay, thank you. All right, please have someone give second reading. Councillor Wing.
Thank you, Mayor Barclay. I move that council give second reading to council procedure bylaw 1737-2025.
Okay, thank you. Questions? All in favor? Okay, next reading. Councillor Bates.
I'll move that we proceed to third reading.
Thank you. All in favor? Okay, and then third and final reading, please. Councillor Dunn.
I move that we give third and final reading to Council Procedure Bylaw 1737, 2025.
Great, thank you. All in favor? All right, unanimous. We'll move into 5.2, payment deadline and penalty bylaw with Director Vickers.
Yes, thank you, Mayor Barkley. So before you is a bylaw that just kind of formalizes the payment deadlines and penalty practices that we've been applying for payments that we do receive. This will go to just clean up any confusion with residents or things like that, if they do have questions about their payment and how we receive payments. So again, we've created bylaw 1739, 2025 as our payment deadline and penalty practice. And this formalizes the procedure that the town has already been applying. This ensures consistency and transparency while providing a clear legal framework for the actions the town takes regarding late payments and enforcement. By adopting this bylaw, the town aligns its practice with provincial legislation, particularly the MGA, and strengthens its ability to enforce these measures effectively. The bylaw clearly outlines key definition, payment deadlines, and penalties for late payments. These provisions clarify expectations for ratepayers and provide uniform guidelines for town staff, reducing confusion and ensuring equitable treatment. So formalizing these existing practices helps ensure that all stakeholders are on the same page regarding their rights and responsibilities. This approach also supports better communication with the public. When policies are formalized in a bylaw, they are easier to explain and justify to residents. This transparency builds trust and helps reinforce compliance as ratepayers can better understand the rationale behind deadlines and penalties. Additionally, formalizing these practices does enhance the town's ability to address disputes or concerns. With a bylaw in place, the town has a documented enforceable basis for its actions, providing clarity and certainty in handling any issues that arise. This ensures that the town's actions are both fair and legally sound. As part of our commitment to continuing improving our processes, the town is also undertaking a review of its tax bylaw. This review will include an evaluation of electronic payment terms to ensure they are efficient, equitable, and aligned with modern payment methods. This forward-looking approach will reflect our focus on meeting the evolving needs of ratepayers. So the payment details that are built into this bylaw, any type of payments that are made through any kind of third party, so this is a financial institution or online payment services, are not considered received until the funds are deposited into the town's official account. We do have two specific identifiers, so one as property taxes, because the MGA does specifically identify a separate way for us to receive payments regarding taxes. So any in-person payment received on the day they are physically delivered to the town during business hours is accepted on the day. Any electronic payment that are received on the date the town retrieves and records the funds into its financial system. Mailed payments are received based on the postmark date issued by the mail carrier in accordance with the MGA. So if they are anywhere in the world and put it in the mail and it's postmarked on or before the tax due date, it is deemed paid on time with regards to that. As well as we do have a secure drop box at the back. So if anyone puts their payment in that drop box at any point during the day on June 30th, even if it's at 11 o'clock at night, we do check it first thing in the morning, the very next day, and those are deemed receive on time. So for all other payments, so utility bills and other forms of payments, so they follow most of the same things. So in-person payments are received on the date they are physically delivered to the town office during business hours. Electronic payments are received on the date the town retrieves and records the funds into its financial system. This is where it's different for utility payments. Mailed payments are received on the date they are physically received and processed by town staff. So that's kind of the big difference between taxes and utilities. So the secure drop box payments are credited. So if someone drops it off at 4 o'clock on the due date, we don't check that every day for utility payments. So that is deemed to be received the very next day. So for the drop box for payments, they do have to be there before 8:30 in the morning. We check it first thing in the morning on the due date and go forward. So if they're there throughout the later the day, they are late. However, with taxes, we check it multiple times a day on the final due date, just to make sure that anyone who sneaks that payment in, we do get it collected. The town of Innisfil will continue to enhance its communication practices to keep residents informed about Bylaw 1739, 2025. Key information about payment deadlines, penalties, and processes will be highlighted on utility bills and tax notices. In addition, the town's website and social media platforms will provide accessible updates and reminders. This multi-channel communication approach ensures that residents have a clear and timely access to information, supporting transparency, education, and compliance with municipal requirements. I'll take any questions that council may have.
Okay, thank you, Director Vickers. Could I please have someone make the first motion? Councillor Wing.
Thank you, Mayor Barkley. I move that council accepts and gives 17/39/2025 payment deadlines and penalties bylaw first reading.
Okay, thank you. Councillor Bates.
Yeah, the only question I had is I was trying to refresh my mind as I went through the data that's here, and I didn't see the penalty percentages repeated here as I've usually seen them. So I assume they haven't changed.
Yeah, Mayor Barkley, through to Councillor Bates. So the penalty percentages are dealt with in the rates and penalties bylaw. So there's just a reference that you are penalized based on the rate in the rates and fees bylaw.
Okay,
So this bylaw doesn't determine the penalty rates. It's really just determining when the deadline is and when we can level those penalties.
okay, and at this point in time, we're not proposing any
Correct.
changes
We have not
to
changed any penalties.
the penalty percentages?
That's correct.
Okay, thank you.
Okay, I have a couple of questions. I'm curious, Director Vickers, the first question, the difference between utility payment and tax payment, why a postmark is okay on one, but has to be here for the utility. And secondly, I think going back to last year, I know there was, I think the July 1st fell on was it a Monday or something?
Yes.
Yeah, and so there were some issues, and I guess I'm curious why somebody could live halfway around the world and mail their tax payment, and it gets here a month later, but the person's doing an online transfer, and the banking system is taking 2 days potentially to transfer that money, and why we don't allow the day of the transaction to be the day that payment is received, kind of like the postmark on the envelope. So,
Yep. So Mayor Barkley, so it is the MGA that dictates that we must accept by the postmark. So there is nothing in the MGA currently that talks about penalty deadlines. And I'll be honest, there's no reason for the difference other than we do accept lots of payments. We levy all the penalties, we send out the statements, and then we would have to go be crediting back hundreds of penalties. So it would just be a lot of time used. If we can get these people just a few days before to pay so that we would receive it on time, it would be easier. We do have a provision in our rates and fees bylaw that if we are kind of making that change around the deadline for taxes, if it does fall on a day that we are closed, it would automatically revert to the next business day. So going forward, the due date technically would become July 2nd if the 30th followed on a weekend like it did last year. So this year it is on a Monday, so we will be open on the Monday, so we hopefully won't have that same issue.
thanks. I just wonder, like, how sound legally it is if somebody is paying, and it's not like a utility bill. It could be thousands of dollars for somebody, right? For a business or something, like thousands and thousands. So I'm just curious about, like, I guess, how legally sound is it if we're allowing the postmark acceptance, but we're not allowing the date of payment on a bank statement acceptance? I can think of one example last year. There were some problems.
Mayor Barkley, to your question, from my perspective, in the form of bylaw, provides a little bit clarity, provides that substance if challenged legally. Prior, if it was a policy, it'd have less ability to.
Okay, so we didn't have this in last year,
We did not, Mayor
Correct.
Barkley, no.
okay, we just had
Yeah.
okay.
And when we sought legal opinion last year, if we had a bylaw like
Gotcha,
this, it
okay.
would have protected
We
us
just
in
had
that
the
way.
policy instead.
Yes.
Okay, no, fair enough, just curious. Okay, so we have first reading, all in favor? Okay, please have someone make the second motion. Councillor Dunham?
Berkeley, I move that council accepts and gives 17/39/2025 payment deadlines and penalties second reading.
Okay, thank you. Any further questions? All in favor? Okay, carried. And consideration for third, Councillor Hysted.
That council gives consideration for number 1739-2025 payment deadlines and penalties third reading.
Perfect, thank you. All in favor? Carried. And then third and final reading, Councillor Maceras.
Thank you, Mayor Barkley. I move that council accepts and gives 1739-2025 payment deadlines and penalties third and final reading.
All right, thank you. All in favor? Okay, unanimous. Thank you, Director Vickers. And we'll go to Aquatic Center borrowing, 5.3.
Yes, thank you, Mayor Barkley. So we do have a borrowing bylaw for the Aquatic Center for first reading before you today. So it's before council for consideration. The proposed bylaw authorizes a revolving line of credit for up to the amount, which is $14,908,465, to manage cash flows during the construction of the Aquatic Center modernization project. So there are sections of the MGA that outlines the provisions that a municipality must follow when proposing to borrow money for the construction of a capital property. A capital property to be financed in whole or in part by a borrowing cannot be acquired or constructed and commenced unless the bylaw authorizing the borrow is passed and validated. So borrowing for the capital property with term longer than 5 years must be advertised. The expenditure for the capital property must be included in the municipal budget, and the term of the borrowing must not exceed the expected lifetime of the capital property. After first reading of the bylaw, the municipality must publish a borrowing notice in at least one newspaper circulating with the municipality once a week for 2 consecutive weeks. And if tendered projects end up coming in more than 15% higher, we would have to then re-advertise later down. So electors of the municipality may, within 15 days from the last date publication of the notice, petition council for a vote on the borrowing bylaw. If a valid petition is received, council may either abandon the project or submit the bylaw to a vote of the electors. If no valid petition is presented, council may proceed to the second and third reading to finalize the borrowing bylaw. Although the line of credit is structured as a short-term financing tool, upon project completion, it is anticipated that any outstanding debt will be transferred to a structured long-term financial product. A borrowing bylaw does become valid and binding if no application is made to the Court of King's Bench to have it declared invalid within 30 days after final passing. So you can see here's just kind of a schedule of the process. So right now we're doing first reading. We do have it scheduled for the next 2 consecutive weeks. Obviously, we couldn't go tomorrow, so it's, I believe, the 6th and the 13th are the 2 weeks that it will be advertising. Then we start our 15-day petition period. After the 15-day petition period, we can do second and third readings, and then the bylaw would be valid 30 days after that. If this borrowing bylaw does not pass, administration will not be eligible to move forward with the Aquatic Center project. So the Aquatic Center modernization project has an estimated total of $14.9 million. To manage cash flow requirements during construction, the town of Innisfil will utilize a revolving line of credit with an interest rate of prime minus 0.25%. Monthly drawdowns are expected to begin in June, accumulating over the construction period as work progresses and milestones are reached. Interest on the outstanding balance will be calculated daily and payable monthly. As of December 31st, the town's outstanding debt is just over $5 million associated with the Southwest Industrial Park project. Despite this existing obligation, and town council just saw earlier, the town remains well within its legislated debt limit and maintains the financial capacity to support additional borrowing for the Aquatic Center. The expected life of the new facility exceeds 20 years, aligning the financial strategy with long-term values and use of the asset. To ensure the town was well positioned for this project, deliberate planning efforts to build debt capacity have been underway for several years. Annual transfers to the facility reserve has steadily increased as part of our operating budget. By 2027, the town is on track to contribute nearly $987,000 annually towards the reserve or towards the payment, reflecting the sustainable long-term commitment to supporting capital infrastructure. Repayment of principal and interest on the line of credit will be funded through a combination of municipal taxes, reserve contributions, and external grant funding. In the event that grant allocations or any third-party contributions are delayed or unavailable, the town is prepared to adjust taxation as needed to ensure all repayment obligations are met. And then once substantial completion of the Aquatic Center is completed, so any remaining balance on the line of credit will be transitioned into a structured long-term financing. The associated debt servicing costs will be incorporated into future municipal budgets with repayment timelines aligned to the long-term benefit and use of the facility. And again, we will start advertising on May 6th and 13th, and we will also post it on our website as well. So,
Great, thank you, Director Vickers. Could I please have someone make the first motion? Councillor Lee.
Thank you, Mayor Barclay. I move that council accepts and gives 1738-2025 Aquatic Center borrowing bylaw first reading.
All right, thank you. Questions? I have a question. So the line of credit, the prime minus quarter, Is that typical of lines of credit for municipalities where it's typically prime minus?
So I reviewed quite a few borrowing bylaws around a line of credit. Most are that. I did see one that was prime minus 0.5, but they were a very large municipality, so I'm sure they had quite special treatment. But
So well, I guess we can decide this down the road, but I'm just wondering why we would move it to a fixed loan when it's if lines of credits are at prime minus, because
we will just be balancing the interest, right? Whichever way is the least amount of interest to be paid for is what way we'll be going. So,
but I don't think you'd normally see a fixed term loan at prime minus.
yeah.
They're usually prime plus something, so.
We'll just watch it to make
Yeah,
sure
for
there's no
sure.
interest rate spikes. We want to make sure we're on the right track. And if we were watching the future, we'd want to lock it down before interest rates went up too high, right? So we just manage.
Shine our crystal balls, right?
That's right.
As if. No, thanks for that. Okay, so we have a motion, all in favor? Okay, carried. And we'll now move on to council chambers audiovisual upgrades, Director Vickers.
All right, so the audio-visual and streaming infrastructure within the town council chambers was last updated in 2017. Since that time, the way municipalities conduct meetings and engage with the public has evolved significantly. The demand for technological, reliable and support for hybrid participation has become essential to modern governance. The existing equipment, consisting of encoders, monitors, a video camera, and a video wall, has reached the end of its functional lifespan. Notably, the current video wall is no longer in production. It has required some repairs and now frequently blinks, disrupting presentations and remote feeds. Outdated computer hardware and software also contributing to reoccurring delays and system failures, resulting in frustration for council members, staff, and members of the public. These issues hinder the delivery of efficient, transparent, and accessible council meeting live streams. To address these challenges, a tender was issued throughout the Alberta Purchasing Connection on April 11th, and it closed on April 21st. And we did receive 6 proposals from qualified vendors. The proposals were evaluated on the proponent's ability to deliver the required services and the overall value to the town. So we did consider the following weighted criteria. So price was 50%. The warranty that they offered was based at 25%, and vendor reliability was based at 25%. And part of that, we wanted to look at past projects. We did want some references as things like that. So the tender outlined the following equipment and services as part of the full audiovisual and technological upgrade for the council chambers. So number 1 was the video wall behind yourselves there. We did ask for a couple of different options. So we asked to replace the existing video wall with a smaller size display, something similar to what you would see on the sides here. Replacing it to a full video wall as you see here, or even having nothing, removing the video wall entirely and putting something up later down the road, such as a mural or just the logo or something like that. Replacement of all our outdated Crestron and Extron components to ensure compatibility with new systems for all of our streaming equipment. All of these, the display monitors here in front of you will get replaced with something more of a pillow stand, so they'll be a little bit down further so that more of your faces will all be visible, kind of down here. We will be upgrading the microphone in the center console there. Programming and system integration, so we do have to upgrade programming and coding to ensure seamless connection with the town's live streaming provider. These 2 new TVs will also be replaced as well, the 2 side TVs, sorry. Full replacement of the video management system and associated cabling to ensure reliable performance. We will be seeing a new upgrade to our camera right there, a new HD wide angle camera to improve coverage for both in-person and virtual viewers. A new control system interface over there for Juanita. As well as we're going to be doing 3 meeting room enhancements. So we have the flex room here, and we have 2 other meeting rooms in the back that will be getting upgraded wireless presentation systems and video conferencing sound bars for the 3 meeting rooms. They are quoted separately, but included as part of the total project. The upgrade is essential to maintaining professional, accessible, and uninterrupted council meetings. It will eliminate reoccurring disruptions due to failing hardware, provide consistent, high-quality visuals for in-person and remote audiences, ensure stable live streaming and virtual participation, enhance the accessibility for residents unable to attend in person, and align with modern expectations of digital service delivery. Additionally, recent changes to the MGA reinforce the need for public accessibility and engagement. Section 216.1 of the MGA mandates that municipalities provide meaningful access to council meetings. This includes technological capabilities to support virtual attendance and the clear presentation of council materials. These are requirements the current system is increasingly unable to meet. So as I said earlier, we did receive 6 packages from the following companies, and we have scored them according to the rating system that was issued in the tender. We would like to note that Applied Electronics did not submit the lowest bid, the lowest cost proposal. However, they achieved the highest overall score when evaluated against the full set of criteria, including warranty coverage, vendor reliability, and past performance. Their submission demonstrated a strong understanding of the town's specific needs and presented a comprehensive solution with long-term reliability and support. Applied Electronics has established ties within the region, which supports their capacity to provide timely service and ongoing support. The company's employees have prior experience with the town's existing audiovisual system and are familiar with its configuration. The familiarity is expected to support an efficient and minimally disruptive implementation of the upgrade. Based on the evaluation results and the comprehensive nature of their proposal, administration recommends awarding the audiovisual and technology infrastructure upgrade contract to Applied Electronics. Administration further recommends that council select one of the 4 proposed rear display configurations, taking into consideration both budget and functional requirements. So they did provide 4 different options for council to consider for the back wall. So number 1, no large display on the back wall. So we would remove the TV, repair the wall, paint it, and come to council at a later date for what they would like to put on that back wall around a mural, a picture, a logo, something like that. Number 2 would be a 98-inch display on the back wall. That brings it up to $106,000. A 98-inch display is the size of these TVs. So we would have 3 TVs all on the same side. If you want to look at the back wall and you want to kind of reference the size, you see there's 3, 3, and 3. A 98-inch, if you take the top bar off and the side bar off, so you'd only be left with 4 panels. That's approximately how big a 98-inch TV would be. Their second option would be a 110-inch display on the back wall. That would go up to just under 119. Again, so you'd be a little bit bigger. Or we'd go to a 136-inch large video wall, and that would bring you up to $127,000. We do need to add a contingency allowance of $6,000 to be included specifically for the control system component of the upgrade. The existing control system hardware will be replaced to maintain current functionality through 2 touch panels. Control functionality will be redeveloped using the uncompiled source code currently held by the town. If the provided source code is found to be unusable or incompatible, we will have additional programming costs in the amount of about $6,000. This contingency is to be included within the project's total approved budget of $125,000. They have, sorry, Mayor Barkley, do you have a question?
No, go ahead.
Okay.
Sorry.
All work, including installation and testing, is scheduled to be completed between June 24th and July 11th. To accommodate this upgrade and ensure uninterrupted access to the council chambers during this installation period, administration will bring forward a separate request to cancel the July 7th AMP meeting. And just a note that during those weeks is when the construction of the desk will also happen, so they'll happen at the same time. Yes, I can take any questions that council may have on this
Maybe we'll
project.
have a chat first before motion.
Absolutely,
To kind
yeah.
of figure this out. So
Yeah.
the side monitors, are they,
Yes, these 2 are being replaced as well.
okay, so I guess my question is, I've been watching people today where they're looking, and everybody's looking up here. Nobody's looking sideways, so do we need to have those 2 on the side as opposed to have the big one up here, even if it was a step larger if it needed to be, but I think it's easy to see from the back row even. So that's one of my questions, I guess, is what council feels about having, it's almost a bit of overkill in here with all the monitors around. And Councillor Hystad?
Thanks, Your Worship. Yeah, that's what I understood. Like, I think the largest screen for the back is suitable, and then those ones become awkward at times, and I think you know, from what I witness, sitting here, they're not as used. That's how I see it. I mean, we got our screens right here. So as to the public, they see the back wall. And I'm fine with the large video wall. If we go that and axe those, that's how I'm looking at it. Thank you.
Is there a larger one than 136? Like, is this?
This is about 136. yes.
Okay, all
Yeah.
right. No,
Yeah,
okay, good
that
enough.
would basically replace this
Yeah.
outside of a few inches maybe, right?
Okay.
But yeah.
Okay, and there's no lines in the new one, right?
There will not be any lines. It would be very seamless. Yes.
Okay, all right. Other thoughts? Councillor Bell?
Thanks, Mayor Barkley. I agree. I see no reason for the sides. Whenever we see people in the audience, they're generally looking this direction. And if you look relative to the size of that, comparative to that, even for somebody in the back row, if they're having trouble seeing, they're not gonna see that as much as they're gonna be able to see this. So I say get rid of the two-side and go with the 136 on the back. Thanks.
Thank you. Councillor Bates, then Maceros.
Sorry, I can't choose.
I agree.
So do we know how much we would save on the sides?
Without getting into, it's approximately $10,000 a TV.
Okay, and then just the other question I had is, usually when we see multiple options, we get a rough idea what some of the other quotes were. Was applied, you said they weren't the lowest, but were they the highest, just out of curiosity?
They
or-
were not.
They were not? Okay. And it dropped then to 70 points. Okay, thank you.
Okay. All good? So get rid of the side ones? Okay,
So I'm clear, we like the big video
Yes.
wall and no side walls.
Yes.
Everything else is kind of okay. So I just will need clarity on the motion because we won't have a dollar amount. We'll have to go back and maybe update the dollar amount to try and
Okay.
figure out what the final number will be.
What I suggest, Mayor Barkley, council is to, can you give a ceiling?
Yes.
Just go up to the ceiling, knowing that there'll be some savings removal, but some increased costs there, but the ceiling cost, we can put that in the motion.
then could we say like up to 127, 451?
And can say not
Less.
including the two side
Yes,
TVs.
and
Can we
could
do
say-
that?
we
Okay.
could
let's-
Incorporate that into the motion?
Let's
to
do that, yes. So
eliminate
then
that?
we can take the full motion, incorporate the 127,451, subtract the two side
Yes.
side TVs.
Yeah,
Okay.
and you can let us know what that
Okay,
is at a
perfect.
future date. So
Okay.
who would like to make that motion? Councillor Maceros?
Thank you. And what about the $6,000? Do we need to add that, or is that?
No, so
Okay.
that is a contingency. We don't normally include that in the motion like this.
Okay,
way.
all right.
But just as long as it's awareness, we will come to you if we do need to use that and just update you with that, but yeah.
Okay. So I'd like to move that council approves the award of the council chambers AV upgrade to Applied Electronics Limited for the amount of 127,451 to be funded from the infrastructure capital maintenance and repair reserve.
Up to 127,
Sorry.
451, and that we're going to remove the side.
Okay, sorry. Yeah. Okay, let me try again. I'd like to move that council approves the award of the council chambers AV upgrade to Applied Electronics Limited for the amount of up to 127,451 minus the side panels, side monitors to be funded from the infrastructure capital maintenance and repair reserve.
Okay, perfect. Any further discussions of that? All in favor? Okay. Carried. It's amazing how fast time goes and how quickly things fall out of use. Okay, move on to 6.1. Welcome Manager Mackenzie for an FCSS board update recommendation of funding.
So I'm just here today to request a decision regarding the 2025 Family and Community Support Services, so FCSS funding based on the recommendations of the FCSS Advisory Board. So annually, the board meets to review grant applications from local organizations to support preventative social programming within the Innisfil community. The FCSS Advisory Board met on March 19th of 2025 to review and make recommendations for the distribution of the 2025 FCSS grant funding totaling $105,000. The FCSS Advisory Board recommends the distribution of the 2025 grant funds to the following organizations as outlined in the enclosed chart. So the Chinooks Edge School Division Family School Wellness Program. It is a program that supports school-based early intervention in social emotional well-being, resiliency, and mental health. It's available to children and youth 0 to 18 and their families. And the program currently employs 3 full-time staff members, 1 at each of the Chinooks Edge School Division's schools in town here. The Central Alberta Men's Shed. The Men's Shed offers a welcoming space to combat isolation and enhance physical and mental well-being through engaging activities. It provides a safe and friendly environment where members in the community can explore new interests, develop skills, and work on meaningful projects. The Chinooks Edge School Division Youth Empowerment Program, which is known as their YES program. This program focuses on promoting mental health and wellness through social emotional learning. It offers both universal and targeted programs for students from kindergarten to grade 8, supporting their emotional well-being and personal growth. And then the Innisfil Senior Drop-In Society, so funding is requested for program coordinator wages to support the ongoing facilitation of programs and activities that foster friendships, social development, and healthy well-being for adults age 50 plus in Innisfil and surrounding area. There is a chart below under financial impacts that outlines the requested funding from each of those organizations and the FCSS board recommendations, which will allocate the full $105,000.
Okay, thank you. Could I please have someone make the recommended motion? Councillor Maceros.
Okay, I'm going to go again now. I'd like to move that council accept funding recommendations to allocate 2025 FCSS external grant funding to Chinooks Edge School Division, Family School Wellness Program, Central Alberta Men's Shed, Chinooks Edge School Division Youth Empowerment and Support, YES Program, and Innisfil Senior Drop-In Society for a total disbursement amount of $105,000 as per the recommendations put forward by the FCSS Advisory Board.
Okay, thank you. Any questions about anything? No? All in favor? Okay, unanimous. Thank you. And thank you for a lovely evening on Friday, the Community Awards. And yeah, I didn't really do anything. Okay, we'll move on to correspondence. Pretty slim this week, so somebody could just make a motion, please, to accept the correspondence as information. Councillor Dunham.
Mayor Barclay, I'll move that.
Thank you. All in favor? Okay, carried. And then we'll go into council reports. Councillor Dunham, do you have anything to add?
Thank you, Mayor Barclay. My not so lengthy report is in there. I have nothing planned for this week.
Okay, well, good. Thank you. And Councillor Wing.
Thank you, Mayor Barclay. Yes, my report is attached. Congratulations to the Community Award nominees and recipients. That was a lovely event last week. And also I'm looking forward to the Carbon Catalyst Conference this Wednesday in Calgary. Thank you.
Thank you. And Councillor Bates.
Yeah, my report is there. I just wanted to say how impressed I was, and when you get the whole group of people that are nominated for the community awards, and consider all the ones that don't even receive the award, it's an amazing group of people. Thank you.
Okay, thank you. And Councillor Maceros.
Thank you. I have nothing to add.
Okay, and Councillor Hystad.
I'll move my report. Thanks.
Okay, thanks. And I don't think I have anything to add either. Also looking forward to the Carbon Catalyst event in Calgary. There's 130 people signed up to go, and looking forward to chatting with Phil DeLuna from Deep Sky, who's going to be sharing a panel with him. So I think that will be good for Innisfil, hopefully. Hopefully. And we'll move on to upcoming events. Just have a motion, please, to accept the upcoming events as information. Councillor Bates.
I'll move those events to be accepted for information.
Perfect. Okay, all in favor? Okay, that's it. And we will adjourn at 4:15. Thank you.